Welcome to Dr. Fred Markets. This is not financial advice. Every day, billions of dollars move across markets that most people don't even know exist. Crypto, stocks, AI, the signals are there if you know where to look. And that's exactly what we do here. Let's dive in.
Your boring index fund is secretly a hostage to war logistics. Microsoft pops another 0.39% on shiny AI demos at Build. Nvidia grinds plus 1.38%, S&P ticks higher. And USO, the oil ETF nobody brags about, dumps over 3% while Ukrainian drones literally blow up a St. Petersburg oil terminal the same week Russia hosts an economic forum. That's your first tell. The market shrugs at real-world explosions and keeps worshipping GPUs. Second signal, NASA says farewell to the Maven Mars mission while quietly clearing runway for the next wave of contracts launches, satellites, comms, rockets, not rails. Meanwhile, private players like SpaceX keep vacuuming launch demand, and insurance underwriters price space like it's still a science project, not a shipping lane. You're watching the birth of a new Suez Canal in orbit. Third signal, every AI keynote, including Microsoft's today, screams the same two words without saying them: bandwidth dependency. Surface Laptop Ultra, DevBox, Copilot, plastered on everything. None of this works without obscene data movement. That means more satellites, more ground stations, more orbital junk, more traffic control. Space is no longer about dreams. It's about keeping Teams calls from lagging when a million LLMs start yapping at once. Here's the cliff. Your portfolio is long software, short the pipes that keep it alive. Here's the connection nobody wants to say out loud. The next oil shock hits space before it hits oil. Not because rockets replace barrels, but because orbital capacity becomes the new shipping bottleneck. When drones slam into oil terminals, tankers reroute and freight rates spike. When debris nails a key orbital altitude, low Earth orbit constellations scramble, latency jumps, and suddenly your entire AI stack pricing models, HFT pipes, cloud inference runs on a clogged sky. You were trained to watch WTI and tanker routes. The real professionals now track launch cadence, satellite failure rates, and orbital debris like it's the Baltic Dry Index. That's the single thing you learned today. Space traffic is a macro variable, not a nerd hobby. Miss that, and your diversified portfolio is just tech beta praying the sky stays friendly. Mechanism time. 3 steps, no fluff. First, rockets are becoming trucks. SpaceX launch costs, Rocket Lab and others turned impossible payloads into routine deliveries. This isn't moonshot season, it's UPS with mock engines. The margin flows from whoever pretends this is still R&D to whoever prices it like boring logistics. Look at how shipping stocks re-rated when container routes mattered more than manufacturing headlines. Rockets are lining up for the same re-rating.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
Second, satellites are becoming warehouses. Starlink, OneWeb, and every comms constellation are just floating inventory of bandwidth and latency. When AI adoption ramps, those birds become the warehouses that store your ability to transact, stream, and arbitrage in real time. Delay a launch schedule, lose a few birds, jam a band? That's not a space story. That's earnings risk for any company pretending to be an AI winner. Third, orbital debris is the port strike. One bad collision at a critical altitude, and suddenly everyone's routes change. More fuel, more time, higher insurance, fewer safe launch windows. The same way a ship stuck in the Suez spiked freight, a serious debris incident spikes space access costs. If your portfolio only owns the cargo cloud, AI, fintech, without exposure to the infrastructure that fixes or profits from that chaos, you're the guy who owned retailers but ignored shipping in 2021. So what does this mean for you, sitting there with your balanced blend of S&P, Bitcoin, and vibes? You stop treating space as fan art and start treating it as infrastructure. Wars hit oil terminals, AI hits bandwidth. Both converge in orbit. The winners are the boring, hated tickers that turn rocket science into revenue and orbital spaghetti into predictable lanes. Concrete action, because theory doesn't pay rent. 1. Add space logistics to your watch list. Rocket launchers, satellite operators, space insurance, debris tracking tech, and ground station REITs if you can find them. You're not chasing moon dust, you're hunting toll booths. 2. Map your AI exposure to actual sky infrastructure. If your favorite AI stock has no plan for bandwidth resilience, no multi-orbit partners, no redundancy, no explicit capex, discount the hype. AI winners without space strategy are just fancy Ubers before they understood drivers were a constraint. 3. Monitor space like oil. Track launches per month, failed missions, major debris events. Treat a big collision headline the same way you treat a Strait closure or OPEC surprise, an immediate tradable shift in cost of doing business for every AI, fintech, and streaming name you own. This is not financial advice. This is the part your advisor ignores because it doesn't fit in a 60/40 brochure. Your returns now depend on a silent, unregulated shipping lane 500 kilometers above your head. You either learn its tides, or you just trust that the sky never blinks. If you want more brutal, specific connections like this, where Mars missions, oil terminals, and Microsoft Keynotes all point to the same trade hit, subscribe, leave a comment with the ticker you think is the smartest space toll booth, and I'll rip it apart in a future video. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.